Hi, good afternoon, folks. Welcome to the show. This is our third episode of a series of webinars that we are conducting to educate public and the mortgage industry as well as the real estate friends regarding how private mortgages works in this scenario. My name is Susantha Akuressa. I'm the principal broker for Haystacks RH, and our branding goes as Mortgage Stars. And like every day, we are supposed to have a resource person, and we had to have our friend Reaza Ali from Fisgard to join us today, who is a veteran in the industry. Unfortunately, due to unavoidable circumstances, Reaza just informed me that uh, his appearance today is in doubt. But I don't want to discourage you all or disappoint you all who are waiting for this webinar. So let's have this conversation going on. And I see so many who has joined today. We are going to talk about some areas where, in terms of a borrower, in terms of a mortgage broker, as well as a real estate agent, how to, because we all get together to help the same people. They're the home buyers or people who are seeking finance um, relating to the properties or home related um, borrowings. So I'm looking forward to cover a couple of very lucrative and important areas in this subject today. That means, in terms of a borrower, what does it mean by a private lender? So if you are a borrower and a newcomer or somebody who's looking to get a house, purchase a house, or renew your mortgage or refinance your mortgage, or doesn't know anything about mortgages, but you have a concern about buying a new home or adding a new uh, section to your home or do some renovations, uh, you might be thinking about what's the best way to do it. So this is for you too. And because we will be covering when that private mortgage solution makes sense as a borrower. And also, this will be important for the industry when you serve your clients. How can you do a better job for the customer, educating them and finding the right solution at the right time? Is it the right time to do this? As well as we will be talking for the uh, industry again, how to structure well a private mortgage so that your application get approved. This is similarly important for the borrowers as well, because what are we looking for well in advance. So, and there are things that you have to be careful as well, so you can make your decisions in a sound way and things can't go wrong. Okay, let's start. So, what it mean by a private lender? For those who are new here or into the industry, a private lender means they are incorporated as a regular corporation, operating under either Ontario or different provinces, and they they are governed by the FISRA, but not federally. And the Mortgage Investment Corporation is the name that has been given to them, and like any ordinary organization. But their main business is lending. How they lend, they acquire investments from different investors and lend them out to the borrowers. So the difference between a private lender and a conventional lender, or a big banks or other monoline lenders such as Home Trust, is private lenders' main focus is towards the property, mainly towards the property, the value of the property, the marketability of the property condition, and what they basically look at is how easy they can dispose the property just in case of a default of the payments. So that's the main area of a private lender's concern. So since assuming a higher risk, right? So they don't sometimes look at your credit, your income, and so most of the area where a conventional lender look at, most private lenders don't concern. So because uh, they're called pure equity lenders. And so, and a private mortgage is structured mainly uh, based on uh, a short-term requirement that you come across. You need money in a hurry, or you need money but you can go to the bank, or you need money, you go to the bank, bank says no to you, but there are deadlines to be achieved. Now, this is a situation typically where, as mortgage brokers, we think about private lending in order to support you and help achieve what you're trying to achieve at this point of time as a shorter term solution. And private lending, so that comes to the topic where private mortgages are not long term. Yes, but private mortgages make sense sometimes for a year, two. Some lenders give money for 3 years as well. But at the end of the day, your destination is not a private corporation or private lender or a mortgage investment corporation because it's too expensive for you to maintain a mortgage with them, but easier to get the money from them. It is much more easier to get the money from them, but it is difficult to maintain because of the high cost, high interest rates. Now, and when we help customers, we don't look at private lending as the first option or to go option. Uh, when we don't find any other solution available for us in the conventional banking sector or the B lenders, whereas we call it monoline lenders, such as Equitable Bank, Community Trust, Home Trust. So if we can find solution in the conventional or in the B world, then only we look at the private lending. But sometimes, some scenarios, for example, now you have applied for your mortgage, and now the mortgage closing is coming up, and there's another week or two to be closed. All of a sudden, you get a notice, or you get a call from your bank or from your mortgage broker that the application did not get approved. It is a time where most of the borrowers get so upset. So they get anxious. So I have seen so people uh, get sick as well because now people don't know what to do about. Now this information will be very, very vital. In a situation like that, you guys are not alone because still we have a path to go. Yes, so the cost, or it can be a little expensive though, but you're not falling into trouble of not closing the deal on time, because when you not closing a deal or your mortgage as agreed on your agreement of purchase and sale, what happens is the seller has the opportunity to sue you, not and they garnish your the money that you have deposited, as well as they can come behind you for the losses that they have made due to the fact that you did not close the deal. So in the when you take that kind of losses into consideration, going into a private, even at an little expensive way, much more better than that. So, in a situation like that, there's no way that we have time to check all the stones or go behind, because by experience we know of a situation to what to do. But for a person who is not really conversant with how this mortgage industry works, I'm telling, there's no time for you to all the stones before you go to private lenders, show the deal, and because time is of the essence at that time. And in this way, for example, a person uh, who lost, who missed a number of payments towards mortgage due to the recessionary conditions or loss of jobs. So some unexpected scenarios, things happen into the family or so. Um, it gives rise to the first mortgage lender, or if you have a second mortgage lender, to send you a letter of demand asking you to settle the mortgage or call the mortgage back. In other words, we call foreclosure or power of sale, in other words, and people get panic. People get so upset because that notice gives them heart attacks. And those who are joining this webinar today, I have to tell you, you don't have to, because the support, the helpline is always there. So that's why, uh, rather working with a mortgage broker who's educated enough, has experience enough in this industry to talk to, rather than working into a bank, because banks has limited options. They have only what they have to offer. But when you talk to a mortgage broker, they have lots of options. So in a situation which is very tragedy, like a power of sale, when you talk to a mortgage broker, so they can always find a solution. So there are lenders, especially in the private world, there are lenders who are specialized in giving solutions on power of sale rescue. So hope you can understand how private mortgages can help you in these kind of scenarios. Now, let's have another area. So a private mortgage does not make sense at all. I have to tell you again. But let's check, when you go to a bank or a monoline lender, most a credit score is one of the salient features that uh, they look at you in perspective of creditworthiness. The credit score is the key performance indicator of a person to let the lenders know, oh, I am good enough in my credit, I'm good enough in my income, I'm good enough, I have history of paying my debts on time. So the credit score, you send a powerful message to the lenders in the decision that they're taking in order to give you money. So if your credit has been bruised for some reason, there are lots of areas where we are going to have this discussion next week, how credit works and what's the importance and nitty-gritties. Some deeper dive into credit and how to get credit reward as well. So let's keep park that idea. But today, so credit challenges makes a huge difference in a credit application, because if your credit is lower, you will have to pay more, because you are staged, or you are categorized as a high risk customer in the eyes of the lenders. And if your credit is better, but you don't produce enough income on paper, so still you are not a good fit for the bank. But in the case, yes, there's a chance we can go to a B world. But if you are in a very shorter time period timeline and your credit is bruised and you need money in a hurry, of course, there's no way we can try A or B. Now, definitely, private world is where we have the solution. And also, people who are self-employed is, I would say, finding it so much difficult to seek credit or secure credit or get obtain a line of credit or a mortgage or a refinance in this scenario in today's world because of the uncertainty or the unreliability or the pattern of their income inflows are not fixed. Most of the lenders, the big banks, what they like is they want to see the money comes to you on a regular basis in the same pattern, and it is called as a fixed income. But yeah, it's contradictory. The government of Canada wants people to do small businesses, but banks doesn't want you to. And so, however, the small self-employment people finding it difficult to secure credit in the conventional banking, where private banking, so it's easier for you to get your mortgage. However, as a responsible mortgage broker, what we do is, yes, we use, because now you have found the house or you want your house is coming into maturity, you want to take equity out, it has to be done at that time. Yes, we use private lending to get that job done, but not as a permanent solution. What we will do, we will educate you, we will set you up, we will have your records ready, because some people do not keep their invoices. Some people do not route all the business income through their business bank account. Some people don't keep their accounting done necessarily by way of a CPA. Uh, so when we advise them, how to properly manage and maintain their financial records, now it is easier for us to take you to a conventional bank, because now you're ready to show how much income you're taking and your notice of assessment, your tax returns, everything. So shorter term, yes, we go to a private MIC, a mortgage investment corporation, and get your deal done. And the exit strategy is we refinance the deal to a conventional bank later. So that is where you have to be end of the day, because your cost is lesser, and you can renew your mortgage thereafter with the bank, and you're safer enough. There are lots of facilities because they have physical branch network and all that as well. And so I would like to go to our third um, section, where the considerations a borrower should have before they sign the documents for a private mortgage. Yes, unfortunately, some individuals, some people, I have seen the times where uh, the right information had not been shared with the borrowers, uh, where they can make a sound decision. And so when you are a borrower and when you see your mortgage broker is talking to you, okay, Mr. John, and this is your situation. So this is the solution. The solution is we will have to uh, go for a private lender because of this so due to these facts. Uh, Before you say yes, and you have to check, the cost factor. What is the cost? Because not like conventional lending, in private lending, you will have to pay a lender fee, which is called, some lenders call it placement fee, commitment fee, whatever it is, it's lender fees. So lenders are charged a fee to approve and place your mortgage. So that's one thing. So because a lender fee, either you have will have to pocket out, or they will deduct it at the disbursement, at the closing, deduct it from the loan proceed. And you have to ensure that the money coming into your hand will be enough. So that is one thing. Also, being brokers, now in the conventional mortgages, the banks pays us a commission. In the private world, the private lenders do not all the time. Sometimes, yes, sometimes, very rare. Some lenders are there that share some of the fees that they charge, split with us. But on average, in private lending, they don't pay us any fees or commissions, so that we will have to levy that commission also on you as the borrower. So it is called brokerage fee or broker fee. And you should be aware about these fees, and it needs to be disclosed to you at the time of the commitment letter. Along with the commitment letter, you must receive a disclosure form. In the disclosure, the mortgage broker who's working you with whom you're working needs to divulge that information in a very clear way. Okay, this is your approved mortgage amount, and this is the lender's fees, this is the broker's fees, the estimated appraisal fees, and this is estimated legal fees and such. So you have a fair understanding, idea about what's going to be your cost, right? So does it make sense? So, so you have to do a little bit of a cost benefit analysis before you make a decision. Anybody do that, but uh, and also now some people fall into the trouble when they sign documents without that awareness, and later they find, oh, 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 because they come and ask the question, oh, I never knew that, I never knew this, I never knew that, you never told me, things like that. No, you can't tell, because it is documented and you have signed it. Now you can't come back and point the finger. So that's why it is encouraged to read all the documents that you're going to sign and understand. If you don't understand anything, please refer it back to the person who has sent it to you, and have it clarified by. And so have that very clear picture. And I also wanted uh, to reiterate the fact that sometimes I have seen people, since the private lending is easier to secure, sometimes people tend to over borrow, that means over leverage, uh, because they have a larger house and there's lots of equity, and so thinking that somebody, friends, so anybody has told, okay, take money out and do this, do that, they take it, but they don't do anything. At the same time, the money has gone as well. For example, I have seen through the home equity line of credit, where we have solutions on second position also. You have your first mortgage with someone, and on the second position, uh, you can get a home equity line of credit as well with different lender. So we do that, and it's not that hard. So people get their home equity line of credit in the second position. Initially, didn't have an idea about, I'm sorry. Initially, they have something in their mind like home reno or something like that, and that's why the lender approves it. But later, they change their mind, because after you get the facility, and we are not going behind you to check if you have done that, but so if you have not been responsible enough managing your money, and use that money for different things such as leisure or going on vacations and things like that. The money is now gone. You have to pay back, and you had not done anything. So it will add additional stress to your financials and finance. So you have to be careful to have a very clear objective, clear picture when seeking that kind of financing, because private money is not cheap. Please keep that in mind. And also, transparency, as I told you, as a borrower, if you don't see your mortgage broker is not transparent enough, or not helpful enough, or not friendly enough, or not professional enough to give you all the information that is helpful for you to make sound decision. If you sometimes you feel they say, okay, we are working on it, but how do you know what are they working on it, right? So if you feel that kind of a situation, you have to immediately act upon it, because it's your right. You have to know what's going on. At the last minute, I have seen uh, people fall into a lot of stress, a lot of trouble because of the results or the answer coming from your mortgage broker uh, to the negative of what you are looking for. So also, when we seek private lending or take private money out, we always must have a clear exit strategy. Okay, how much I need, for how long, what am I going to do with it, how am I going to pay this back. For example, now you have sold your house, and the house closing is on 30th January. At the same time, you have booked or reserved a house from a builder, and they need their next payment, okay, on the 15th of January. Now, the sold house is not yet closed, but you need money 15 days before. Now, how are you going to do? You go ask from your friends, family, but it doesn't work at all the time. In that, in a situation like that, of course, we know that we get a private money, but we have a clear exit strategy, because after 15 days, you are certain that there's an APS, agreement of purchase and sale, which is firm now, and that mortgage is going to get closed. We are getting money, so that money will be used to pay off this mortgage. That is what is a clear exit strategy all about. Or else, another scenario, you have a first mortgage, and you have a home reno debt consolidation, for which you are seeking a second mortgage, right? And when you give the second mortgage, talk to your broker regarding how you exit from the second mortgage. For example, now at the time your first mortgage comes to renewal or the maturity, let's say in a year, this second mortgage also can be refinanced into the first mortgage with the bank. So that's a clear, good exit strategy. So without an exit strategy, my dear mortgage friends, without exit strategy clearly stated in your notes when you submit the deal, probability is high that your application get declined by the underwriter. Having said that, so our time has up for today's webinar. I really thankful for all the people who have joined us today. Looking forward to talk to you guys next same time next Wednesday 12:30 p.m. and the subject will be around credit and what happened around credit, how the algorithm works, how the credit bureaus determine your credit rating, and what denotes it, where you can build up, what are the areas people make lots of mistakes. We are going to talk about that as well. If you have further questions, please don't hesitate to call me at 647-544-0290. It's 647-544-0290. And you will find that information below this video as well. And thank you so much once again for joining us. I am your mortgage broker, trusted by many, many borrowers in Canada. My name is Susantha Akuressa again. Looking forward to seeing you soon. Bye now.